The Public Investment Corporation has welcomed Old Mutual's limited return to the JSE. The PIC says it's pleased at the company's return to a primary listing in South Africa. The CEO of Old Mutual Limited, Peter Moyo, joins us now for more on that unbundling and the debut on the JSE. I'm sure a good day for you, sir.
Yes, it's been a good day for us, Motheo. It's exciting for this iconic financial services group to be listing on the Johannesburg Stock Exchange and listing in the other African stock exchanges in Malawi, Namibia and Zimbabwe, and we maintain a standard listing in London.
A soft start at 28 Rand a share today on the JSE. Do you have the last number when markets closed?
I think we closed at 29 Rand 40. But that's really not the issue. The issue for us is what is it that we've got to now start doing for our shareholders. We have a very clear plan. We've actually defined what we call our 8 battlegrounds, and those are the things that we've said to the market we need to be measured around, and we are actually excited that we can actually deliver on those 8 battlegrounds. But more importantly, we've also said to the market we're very clear on the targets that we need to be measured on, our growth rates, our return on net asset value. We also have an exciting dividend cover.
Let's look at the importance of this particular deal for the shareholder. I know in 1999, when you demutualized, a lot of your shareholders and people that held business with the Old Mutual got to benefit in terms of shares. What's the main benefit for shareholders this time around?
Well, the main benefit for shareholders this time around is actually the whole process of managed separation. Our listing today is the culmination, is the substantial completion of managed separation. There is one more step, our unbundling of 32% of our shareholding in Nedbank. You had this group that had 4 very good businesses, a standalone that were doing very well. On top of that, you had the PLC structure. That PLC structure was really more of a portfolio manager. So you remove that structure, you actually take away all those costs, which are a cost for our shareholders. You leave these 4 standalone businesses to do their own. In fact, the one of those 4, being the US asset management business, was sold to pay off the debt in PLC. So what you're left with is Quilter, which listed yesterday, and then us, we listed today, and below us you've got the 54% in Nedbank, and within the next 6 months we have committed to distribute another 32% to the shareholders. So you actually unlock the value that way. Take away the cost of managing PLC, take away the conglomerate discount, let these businesses run on their own. And for us, we actually believe that we should actually be valued on our own merits as Old Mutual Limited.
We'll get to that value in a moment. But in terms of the strategy...
Oh, sorry, I must also say, so our shareholders, the shareholders of PLC, for every share they had in PLC, they receive one of our shares. And the PLC shareholders, for every 3 PLC shares, they got one Quilter share. But also for our staff, every one of our permanent employees is actually going to receive shares to the value of 10,000 Rand each. But they've got to stay with us for the next 2 years as permanent employees.
Sounds like a fair deal. And in terms of looking at the strategy going forward, I mean, it seems like you've simplified the business by, this managed separation. But what is the strategy in Africa? Why is such interest, especially you have secondary listings in Zimbabwe and Namibia as well?
Well, firstly, the secondary listings actually mirror what we always had as PLC. So there is not too much that stands on that. But our strategy is actually very clear. We are well positioned in the biggest financial services market on the African continent, i.e. South Africa. We are actually very well positioned in the SADC region outside of South Africa. We are number 1 players in Zimbabwe, we're number 1 players in Namibia, we're number 1 players in Malawi. We've said we've got to now start growing the East Africa bit of our business, where we've got the short-term insurance business, asset management business, lending business, life business, the healthcare business, property business. So that's actually our focus, and it's clearly, we've talked clearly about this in our priorities for the next few years. If we fix that and do the right things, grow the businesses that we have in South Africa and in SADC, take out, and we've committed to taking out costs of over R1 billion, and actually make sure that we start getting the value out of West Africa in Nigeria and Ghana. It's actually, I actually think it's actually a good proposition for our shareholders. We've got a strong management team that we believe can do this. So our priorities are very clear. We've said we've got to put our heads down. A lot of people have asked us whether they should see us, they're going to see us planting a lot of green flags all over the continent. No, we are putting our heads down, delivering on what we have on the continent. We operate in 13 countries on the continent today.
The continent is a very competitive area in terms of fintech as well. A lot of companies also coming through as well. As you say, you're going to go into East Africa where fintech is very popular. What kind of companies Old Mutual looking like into the future?
Well, it's actually interesting. One of the big things for us in East Africa is, firstly, the GDP growth rate is actually more compelling than we have in the SADC region. The population is about 3-4 times what we have in the SADC region outside of South Africa. The adoption of mobile technology has actually been one of the fastest, and not just on the continent, but in the world. So if you look at what we call our battlegrounds, one of them is actually refreshing our technologies, and we are looking at how we are going to compete, particularly on the digital front. And one of the areas that we are looking at is East Africa. I mean, you look at mobile money, it's actually big, and therefore we have to deal with our customers in that part of the world in the way they choose to deal with us.
And very quickly, to put you on the spot, are you going to be penning a deal with a PIC in terms of them investing more into Old Mutual?
Well, the thing is, the PIC is actually one of our investors. It's actually one of our biggest investors. Yes, we'll actually like to see them invest more. Don't forget that we actually agreed a deal with the Economic Development Department that we're going to grow our black shareholding in the group, and having PIC invest more is actually going to help us towards that journey. So we are wanting to see the PIC invest more in us. But the important thing is we've got to deliver to justify them.
All right, then, thank you very much. A new start for Old Mutual Limited. That was Chief Executive Officer of Old Mutual Limited, Peter Moyo.